Hi, welcome to Wealth Mill Securities Market Wrap. It's always a joy for me to come before you to share about the market updates. From past few months, we have not sharing our official broadcast because I have been coming regularly in different media news channels and I have been sharing my market opinions through different newspapers. That's why I could not able to come and share with you all about Wealth Mill Securities podcast. So this week I want to share it with you my experiences in the earlier market cycles and how the market is going to be in the coming new year. That's what I would like to share with all my viewers and our investors. First of all, to all our investors across the globe, happy and merry, prosperous Christmas. It's always a joyful moment for me to come before you during Christmas season and share about Wealth Mill Securities market outlook. It's a joyful year, past 12 months, and Nifty have given nearly 23% returns in the past 12 months. And there are many stocks which are stocks never heard also, they have been jumping in these bull markets. Definitely, we call it as throughout the globe, markets are definitely in a unstoppable mode, and also they are in a secular bull market across the globe. It's not only in India, the S&P 500 and the markets which have been in a bear market for more than 20 years, like Nikkei index, is started going up in past 18 months. That's what we can see, a secular bull market across the globe. But coming to Indian markets are quite resilient, and markets have given good returns and created wealth to all the investors. But for the investors right now, the positioning is very important in this market juncture. What kind of position investors need to have, and allocation to stocks is very important, and where you are allocating is extremely important at this current moment. Investors has to allocate right now. I was quite bullish on mid and small cap stocks, and I was ultra bullish on micro cap stocks. In our Wealth Mills portfolios also, we have many micro cap stocks we built up over a period of time. But now my sense and my focus will be how I am going to restructure the portfolio. Say, wherever there are excess profits in our portfolios from mid and small cap stocks and the micro cap stocks, we are going to book profits. That's what we have been doing from past 6 months. Now our strategy is building up some kind of large cap stocks in our portfolios. We have been advising our investors to buy Reliance Industries. You might be surprised why Kranti is becoming a large cap guy. Of course, certain conditions in the market, certain valuations in the market, and the future outlook in the market and particular stocks and the sectors, we tend to go along on large cap stocks. We are not averse with respect to large cap stocks. We do like large cap stocks. So one of our favorite pick from the large cap space is Reliance Industries. We continue to buy Reliance Industries at every dip. Apart from Reliance Industries, from last December also we shared about a company by name L&T, which is from the capital goods and engineering space. That stock have given more than 100% returns. It have given 150% return when we were buying the stock in last October, November, around 700 to 800 levels. Now the stock is trading at 1800. We remain positive about with respect to the fundamentals of L&T is concerned. We continue to buy at dips Piramal Enterprises, which we were ultra bullish when the stock was touched a low of around 600, and we continue to hold in our portfolio. But wherever we need some kind of profits for the portfolio adjustments, we have been booking profits in Piramal Enterprises also. But those investors who can hold on to the stock, they can hold on to the stock. The strategy is going ahead. We are quite bullish about Indian markets, despite of the facts, inflationary moves that are coming across the globe, and also people are worried about the hawkish stance of Federal Reserve and also inflationary signs across the globe. I am making a statement on a Christmas day. You need not have to worry about inflation. The reason is inflation brings the growth into the economy. Of course, Federal Reserve and central banks across the globe, they tend to express their uneasiness towards inflation because that is their job to control inflation. But when the times become inflationary, the situation become inflationary, the best hedge for investors to be in one asset class is that is equity. And also, what I did, say to the people is when Federal Reserve is managing zero interest rate policies, all the economists and everyone worried about it's dangerous to be in zero interest rate policies. But right now, when Fed is trying to increase in baby steps the Fed rate, again people are becoming negative in the market. So we psychologically get ready to face at least 2-3 rate hikes in the coming days. But 2-3 rate hikes by Federal Reserve at this point of time, nothing to worry. Equity market tend to be in a positive zone despite of rate hikes that are going to come across the globe. Acknowledge to the investors is the first and foremost thing is the positioning of your portfolio is extremely crucial for the investors. While coming to the sectoral outlook is concerned, we remain positive with respect to the digitalization and also the IT space. We are quite positive, and we have been buying stocks like KPIT Technologies, which given more than 200% returns to our investors. We are quite bullish with respect to Quick Heal Technologies. Of course, it performed well, but we continue to buy this stock. It was sluggish from past 6 months, but we continue to buy that stock, and the prospects of cyber security space is concerned. And last October, we bought companies like Wockhardt, which was unheard and unflavored stock in the markets when people were buying different other stocks. We bought Wockhardt, and from the level of 300, the stock went into 800 level, and the stock currently, because of the space and because of the profit booking in the entire pharma sector, the stock came down to 400 levels. We continue to remain positive on Wockhardt. Of course, we do book some profit for Wockhardt in the range of 700 to 800 levels to our investors. We hold Wockhardt, and we are continuously buying Wockhardt at these price levels despite of the negative news around this particular stock. The main reason is why Wealthmill Securities and me especially bullish about Wockhardt is there are some inherent strength in this company, and the valuations looks attractive for this stock. And past 1 year I have been educating investors. Vaccine game is not over in the public domain. I shared many times when people are thinking about the first dose and second dose. At Wealthmill Securities, we have been acknowledging to our investors and the viewers there will be a booster dose and many doses to come. Also, yesterday Prime Minister Modi announced a booster dose for the Indians above 60 years of age, and also health workers, the third dose, that is the first booster dose to everyone. So this vaccine game is on. Wockhardt Pharma is going to take the advantage of this. And the other stocks, while coming, we added in our portfolios in the past few months is Siemens. We're quite bullish about Siemens with respect to the mid-cap stocks are concerned. They are going to take the capital goods space and also digitalization. So at every dip, we continue to build up our position with respect to Siemens, and we also added some kind of mid and small caps recently. The sector-wise, in IT, at every dip, people can add any IT stocks in your portfolio. We have some specific stocks in IT. We are adding slowly. I don't want to discuss in the public domain. You can call up our research team. We are more than happy to help you to invest in those kind of stocks, because if we discuss those stocks in the public domain, the inherent risk in those stocks are not suitable to the public. So we have been a little bit cautious, because we need to check the risk appetite of individual investor while advising these kind of stocks to the investors. Coming, one disappointed for me is auto sector. Of course, there are many auto sectors like Mothers and Sumi, they performed well in our portfolio. But with respect to the stock like Bharat Seeds, it's not moved anywhere That is the one stock which has been a laggard in our portfolio. But I look Bharat Seeds not in terms of a monthly or quarterly or yearly performance. Where I look forward for Maruti is it is an accumulation phase. One need to have a target how much quantity I need to accumulate in their portfolio. So be stock specific and try to have, don't fix a price target to a stock. The retail investors tend to do a big mistake is what is the price target for my stock. If I believed a particular thing and the strength of that particular company, I don't look at the price of that particular company. What I look at is how much percentage of that stock I can buy, how much quantity I can buy. It is a 10,000 quantity, 1 lakh quantity. That's where my focus is. So, some stocks you should not book you should not look the price of that particular stock. You should always tend to accumulate that particular stock. So Bharat Seeds, I encourage investors, if you are invested, try to accumulate the stocks in your portfolio. And the other stocks like Subex, which have given a nearly 7-8 times return to our investors, we book profit happily. We are not that much bullish at this point of time with that particular stocks. We don't have much bullishness with respect to Subex at this point of time. Of course, the world, when we were buying that same stock at 7-8 rupees, nobody heard about that particular company, and people used to think what this fool is doing with this company buying at 7 rupees. But people are ready to buy that stock at 70, 80, and people are not now talking about 500 rupees for this stock, blah 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 on this stock. But we know the basic fundamentals and we understand their business model. So that's why we made 7-8% return, 7-8 times of returns, and we exited happily to all our investors. From here onward, the momentum will slow down for that particular stock. And FiberWeb, the stock which we have been buying from a level of 15 rupees, currently trading at 40 rupees. I am convinced with the prospects of that company, and one can have a stock target, how much I can accumulate, how much I can swallow in my portfolio. So have a target of number of quantity and try to go and buy that stock. Have a time horizon of 3 to 5 years. The stock is tend to do well in the days to come, and also the stock valuations are very attractive at this point of time. I would like to inform to the investors one thing. When Tata Motors was available at 50 rupees or 60 rupees, investors are very hesitant to buy that stock. Now the stock is at 400, now it's trading around 470, and everybody want to crazily buy. So that's what the investor psyche, that price changes the perception of the people in the market. So price should not change your perception of the particular stock. The valuations, one need to look at the valuations. Everybody knows the price but not the valuations. As an investor, and our endeavor at Wealth Securities is to inform about the valuations of the stock to our investors. That's the very crucial and the crux in building up a portfolio and creating wealth to the investors. So these are the different themes and strategies we are following right now. So I'll be keep on interacting with you through different mediums in the coming days. It's a joyful year for all our investors. But one caution note is, don't try to jump into every running train. There are many small caps, there are many stocks without any fundamentals or without any kind of great business models. They have been running. So just wait and watch. As Warren Buffett always quotes, till the time water recedes, we don't know who is swimming naked. So there are many stocks that tend to look very attractive. Just I fold my hands. I don't want to touch those kind of business models, because past history shows the people who are chasing those kind of stocks. Just to mention about a couple of stocks, there used to be a tech company by name Silverline Technologies, which was the darling of the markets. The stock disappeared. Petafor Software, Teledata. These are the just handful of stock and just a few stocks. Just to tell you, Unitech used to trade at 1 lakh rupees. Now the stock is at 1 rupee. So one need to jump and buy every stock that's available in the market. You need to have a strategy to create wealth, consistent and steady wealth to your portfolios. That's all with me. I wish you all, our investors, Merry Christmas, and do take care about your health. Thank you.